What is going on, guys? Welcome back to another brand new video. Today we're going to talk about smart money concepts, everybody's favorite topic on YouTube. Okay, and this is the way how I trade, but this video is going to be a little bit different because my way of trading has changed. And today we're going to discuss that change, okay? And hopefully you guys are as excited about it as I am. But before we jump into the video, there will be a link in the description which will take you to Binance.com, which is one of the world's biggest crypto exchanges. You can buy, you can sell, you can trade, you can swap, you can transfer, you can store, you can do whatever you want. Okay, it's up to you. But if you use my link to sign up on Binance.com, you will get a 20% discount every time you have to pay a transaction fee. There will also be a link in the description to my other YouTube channel where I upload gaming videos sometimes. There will also be a link to my channel, Twitch channel. All these plugs, bro. Where I stream video games, of course, where I stream video games almost every single night. Okay, Call of Duty, sometimes Valorant, whatever you guys are interested in. If you have a couple of extra seconds, you're more than welcome to join us. Now let's jump into the video. What is so different about the smart money concepts that I used to trade with to what I'm doing right now currently? Well, not much has changed except that a couple of days ago, a couple of weeks ago, I was noticing something, and I was looking at the charts, and I noticed that the predictions that I made, the setups that I was looking for and waiting for, I used to miss out on those setups, on those trades by a couple of pips, right? And so I was like, why is this happening? This has never happened to me before. Or the setups were just straight up failing, okay? But 99% of the times, it was just me missing out on the trades by a couple of pips. And the markets were, instead of reversing from the zones that I was looking at, were reversing from other zones, which were also very close to the zones that I initially looked at, but they were still a couple of pips away, and that's how I was missing out on the trades. Because let's say I was looking at a zone right here, the market would reverse from some zone right here, okay, some order block right above the zone I was looking at. And so I would miss out on the trade by a couple of pips. And so I started backtesting because it made me so frustrated. I stayed up nights. That's the time I had to look at these charts at night. So I would stay up at night and I would look at these charts and try to understand what was happening. And so I figured out a way, right? Because backtesting really helps. And so all these people who were against backtesting don't really understand that these are just like your regular exams. You just take this backtesting as your past papers, okay, and you study them, and based on those you try to make a prediction on what's going to happen in your current or in your future exams. And so backtesting all of this, I realized that I understood my mistake, okay? And so when I fixed that, it was so beautiful because no matter what prediction I made, it was going exactly how I predicted it. Okay, it was going exactly my way. And so let me show you guys what I'm talking about. So here on the charts, everything is the same, okay? Everything is the same. Nothing has changed by the way I look at the charts, okay? I look at the charts, still the same way. I would look at two different points from where the market was reversing from. The market started making new market structure, for example, right here. Okay, after this lowest low, market started making higher highs, higher lows, higher highs, higher lows. The uptrend started. So basically, I'm looking at the point where the market shifted in trends. So this is the last point where the market started shifting its trend. And so if you don't know what supply and demand zones are, I basically mark my supply and demand zones. And that's how I trade right? I wait for the market to visit one of those zones, and based on that, I take my trades. And so if you don't know what supply and demand is, you can watch this video right here, supply and demand, how to draw supply and demand zones accurately. You can watch this video. It's very detailed, very informational. And so right here, I would just go through it real quick. Supply and demand zones are basically support and resistance, if you want to call it. So a supply zone would be where the market is creating a resistance, strong resistance, and a demand zone is where a market is creating a strong supply, a strong support, sorry, my bad. And so a strong demand zone is where the market is creating a strong support, okay? So support and resistance. Now that we have labeled our 2 points where the market is reversing from, and why is this a strong resistance, why is this a strong supply zone, is because the same reason. Up until this point, market had made only higher highs and higher lows, but you can see right here, market is breaking this previous low by creating this lowest low, this lowest low, this lowest low. It just keeps going on and on. So the trend has shifted from here. Now that we have our two supply and demand zones, what I'm going to do is take a rectangle and extend this all the way into the future. So when the market comes back to this point in the future, I'll be looking for a sell. So we are going to sell at supports. So we're going to be looking for sells at supply zones, and we are going to be looking for buys in the demand zones. Okay, so I like to mark my order blocks. If you don't know what order blocks are, you can go here and watch this video. What are order blocks in Forex? Very detailed, again, very informational, educational video. So once I have my zones, what I will do is replay, right? Just who's texting me? Okay, so I will extend this into the future like that. Make sure it's an order block. Yes, it is. It's just like that. Okay, so now I will wait for the market to come back to this area, and let's see. Very close, very close, very close, very close, and boom. Now, what's so different about the way that I used to trade in the past? Okay, because this is exactly what I used. So once the market comes to my demand zone, okay, so I'm going to be looking for buys. So what I used to do, by the way, I label my supply and demand zones on the 1 hour time frame. I look for an entry on the 5 minute time frame. Now that's what's different from my past method of trading, way of trading, because I used to mark my zones on the 1 hour time frame, and I would enter on the 1 hour time frame, exactly like how I'm going to show you right now. So at the start of this zone would be my entry. My stop loss would be just beneath the lowest low of the demand zone, right? So like this. And my take profit will be somewhere to the next point of liquidity, closest point of liquidity. Now, what's wrong with this way of trading? Nothing wrong, because I used to do this, okay, years of experience. Nothing wrong with it. The only problem here is a bigger stop loss. So right now I have about, let's say 30 pips stop loss, okay, taking into account the spread as well. Let's say 30 pips stop loss right here, okay? Now, if the market fails and breaks below, I have 30 pips of stop loss on my hands, okay? Which is something to be concerned about. And I'm entering straight away. I have no extra confirmation, no rejections, nothing. I have not waited for any further price action, nothing. Entering straight away. So there's a chance that this zone is going to fail, and I'm going to have 30 pips of stop loss. Okay, but instead what I can do now is I drop down to the 5 minute time frame, and I wait for the market to show me some sort of change in market structure, a shift in trend, but on the smaller time frame. That is where I'm going to look for a trade. Okay, so I'm going to fast forward this. Okay, so you can see the market keeps going lower. So far I see no indication that the market wants to reverse. Okay, and boom, now I do have a confirmation. Why? Because right here market created a new higher high, breaking all these previous highs. Now when this happens, I have another rule that I like to follow, that one zone is broken, I would like to see another supply zone, previous supply zone, being broken. So I like to see the break of previous two highest highs, two zones, previous two supply zones, or previous two market structures, and then I will look for a buy in case of a buying scenario. Okay, so I will not look for a buy yet. I will keep waiting. Boom, right there. I have a break in market structure of all the previous highs. One zone, second zone. If it breaks this one, even better. You know, if it keeps going higher instead of coming back low, you know, if it goes higher and breaks this, even better, you know. But what happens is that if it starts reversing now, is I'm going to look for a buy. Okay, I'm not going to wait further for the market to break this one, because I already have my confirmations. This is enough for me. And even if I lose now, I'm going to show you why it's going to be okay for me. I don't really care about this loss. So you can look at the buying pressure. This tells me that the buyers are now in control. They want to take the market higher. So where is going to be my point of interest? Where is going to be that one candle where I'm going to be looking for that order block? Where is that going to be? It is going to be just before the buying pressure. Okay, the last sell candle before the break of all the previous market structure, So this buying pressure broke all the previous buying pressure, right? So where is the last sell candle before all of this buying pressure? It's right here, this last sell candle. So this is now going to be my entry. Okay, you can now label the whole candle with the wick. Okay, or what I like to do is I like to just take into account the body. That's just how I trade. Even if I miss the trade, it's okay. I don't really care. But I like to trade with, you know, the only the body taken into account. So my stop loss will be just beneath the low of the last sell candle. Now you can see from 30 pips to almost 3 pips. Okay, or 5, 6, 7 pips, taking the spread into account. Okay, and my take profit will be closest to the next point of liquidity, which is right here, or this support zone, which will now be acting as a resistance. But I like to play it safe. I'll just keep it here to the next point of liquidity. Now what happens, right? This is our entry. I will enter at the start of that candle's body. Let's fast forward and see what happens. Boom, we get triggered right here. This is our entry. Let's see what happens. Let's see what happens. Okay, now we keep breaking even the previous market structure. Now I am 100% sure that this trade is going to be profitable. Let's see what happens. Uh-oh. Oh no, what is going to happen now? Some people are going to close their trade right here, but me, I'm confident. Let's see what happens. Boom, just like that. Bada boom, bada bing. Okay, just in a couple of minutes. And by the way, let me show you something. This happens, all of this, right? This entering into the strong demand zone, this happens at London Open, 10 a.m. You can see the time at the bottom of the screen. That's 10 a.m. That's London Open for me. Okay, and this entry we get when? Very close, 1 hour close to the New York Open. So pre-New York Open is when we get this re-entry. And trust me, when you go and look at this at your own charts, you will realize that all of this is happening around London and New York. Either New York Open, pre-New York, or New York Open, okay? But this is where the big volume comes in. This is where the big money comes in, okay? How do you know the big volume is here, the big money is here? You can look at the moves, the impulsive moves, the big candles, the shift in market direction, the buyers being in control now, okay? So look at how crazy, at how guaranteed it is, this way of trading. How insane. You have to be a lot patient though with this method. Okay, you have to. There's no way you are gonna be successful in this way of trading with being an impatient trader. And so let me show you guys another example, and we'll just we'll end the video right there. So also right here, you can see that the market, this supplies demand zone is very strong. Why? Because look at how much previous market structure was here. We have so many points over here that need to be broken, right? So many previous higher highs. And in order to break this, we need a lot of buying pressure. We need a lot of buyers. We need a lot of the big money, okay? And so I'm going to extend this into the future. Okay, let me... Okay, so let me extend this into the future, right? Let me extend this into the future. And let's see how this plays out, okay? I will wait for the market to come back to this strong demand zone. Again, boom, right there. So why did I choose this demand zone? Because again, we have from here, we broke all of these previous highs. From here, this was the... After this, do you see any lowest points? And then the shift in market structure? No. This was the lowest point, and then came the shift in market structure and a shift in trend. Okay, so this is why I'm choosing this demand zone. You have to be very accurate with your supply and demand zones, otherwise it's not going to work. So now that I have, that the market has revisited this area, I'll drop down to the 5-minute time frame. So let me go back a couple of candles. Okay, so again, if I was trading the old way, I would just enter blindly at the start of this zone. Okay, my entry would be here, and my stop loss would be just below the lowest low of the candle. So about 25 pips. Okay, so 25 pips. Keep that in mind. Let's see how how much further we can decrease the stop loss. Okay, so I'm waiting for the market to come back to that zone, right? Boom, right there. Now, am I going to enter straight away? No. Okay, so right here, we have a shift in the market structure. How do we have? Well, we have just broken all of these previous highs by creating this higher highs. Now, am I going to look for an entry? No. Like I said, I look for at least 2 previous zones to get broken. So I'll wait for these zones to get broken. All these highs, even this, if this one can get broken, even better. All these previous supply zones, if they can get broken, even better. Okay, so I'll wait. Okay, now right here, I want to show you guys something very interesting. You guys can see that now it is very much confirmed that we keep creating higher highs and higher lows. Okay, we keep breaking all the previous highest highs. For example, these. With this highest high, even this supply zone is broken. This little bullish candle, okay, this last supply zone, even that is broken. So we have multiple break in market structures. Okay, multiple. Now it is very clear to me that the market wants to go higher. Okay, so what I am going to do now is that I'm going to find that last candle, that last bearish candle, and my order block, off of which I'm going to enter for a buy. So before all of this, okay, where is the last sell before which came the buying pressure, which broke all the previous highs? So we broke the previous highs right here. Okay, with this buying pressure. So where was the last sell candle before that? It's right here. This trade was insane. I sent this into the Telegram group as well. Okay, so I'm going to label that. Again, I'm going to take into account only the body. That's how I like to trade, right? That's going to be my entry. And so my stop loss was about 25, 26 pips, right? Look at that, about 6 pips. So just beneath the lowest low of this one. So about 6 pips, or let's say 8, or let's say even 10. So where's 25, where's 26, and where's 10? You can see how insane this way of trading is. Okay, and my take profit will be right here, around, let's say, this point of liquidity. Okay, so about 95 to about 15 to 1 reward to risk ratio. Okay, so let's see what happens, right, when the market comes back to that candle. Oh, it's getting very close, and boom, right there, we get triggered into the trade. Right as soon as we get triggered, you can see the reaction that comes after that trade, right? Okay, oh wait, did we lose this? Oh, never mind. Okay, so you see how close it gets. Do you see that? This is how they manipulate you into thinking that this is not going to work. But me, after seeing multiple confirmations, I can enter these trades with my eyes closed. Okay, let's see what happens in the future. Bada boom, bada bing, bada boom, bada bing, bada boom, bada bing, bada boom. Okay, so almost, right? We almost, wait, did we actually? Okay, so it did almost, how many pips? About 90 pips. Okay, not bad, right? So, oh, because there is a, right here, point of liquidity right here. This is where it reversed from. So anyways, so do you guys see how insane this is, right? And if you go to the Telegram group, you can see multiple trades, multiple trade ideas that I sent. Of course, I lost some. I'm not going to sit here and pretend like I win every single one of these, but there are some mistakes, okay, in which I lost. There were a couple of mistakes. The very first, the major mistake I always make whenever I lose one of these trades is that I don't wait for these previous 2 to 3 zones to get broken. Okay, when the market breaks all of these previous zones, then it's a guaranteed, at least for me, a guaranteed trade. Okay, but the major mistake that I make is that I don't let the market do its thing, make the all the create market structure and then break it, give me further confirmations. I don't wait. So this way of trading is very rewarding if you're a patient trader. So I learned from my mistakes. I re-enter the market. I execute my trades. This is how I become a profitable trader. Okay, we keep learning. Okay, none of us is a complete learner, is a complete person. We learn something new every single day. And so this is just one of those things that was so much, that was eye-opening to me. It was right there in front of my eyes, yet it was so far away from my eyes as well at the same time. So far away from my understanding. And so you can go onto your charts, you can back test this. Okay, do not straight away apply it into your trading. And yeah, this is, I mean, insane. I don't know what to say. It speaks for itself, right? And also you can see that also this is happening at London Open. You can see 10 a.m. This is London Open time for me again. And this is exactly happening at New York Open, 15. So that's 3 p.m. for me. Exactly at New York Open. So this is how crazy it is. When the big money steps in, the volume, you can see it's very much visible to you clearly that the big money is involved here. Okay. And so I hope you guys learned something new from today's video. If you have any questions, drop them in the comments below. I'll be more than happy to answer them. And I'll see you guys in the next video. Peace.